This is Bazaar Morning Call, broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Hello and welcome to Bazaar Morning Call. You're watching us live from the CNBC TV 18 Motilal Oswal studio right here in Mumbai. I'm Sonia Shenoy and joining me on Bazaar is Prashant Nair and Nigel D'Souza. Folks, morning. Today is Raksha Bandhan, so happy Raksha Bandhan to everyone celebrating. And today actually kickstarts the long, months of festivities, right? Raksha Bandhan, and then you enter into Diwali, then there's Christmas, and there's Ganpati in the middle.
Right.
So, is your Indian attire ready?
Yeah, my Indian attire is ready, and wishing all our viewers very happy Raksha Bandhan. But I think the Muhurat or the auspicious time is 8 to 9.
Yeah.
I think I'll be tying it a little earlier, I think so, because the kids as well will celebrate. So, lovely, good times. Yesterday we had Onam, today we have Raksha Bandhan.
Yes, and more than tying, I guess, it's the gifts that come.
Yeah.
I'll be getting it, but you'll be giving it.
I'll be giving it, yes.
No, nowadays the gifts are both ways, right? Are they both ways?
No, they're not.
No?
My sister gives me throughout the year, so I'm lucky. So only on this day at the birthday I have to give.
I'm looking forward to my gift. I don't know if you guys get gifts or not, but I definitely get a lot. So, but yeah,
lovely day.
Absolutely. It's an auspicious day and it's a beautiful festival. Well, let's just quickly run you through what you need to know as we start another trading session. Then let's start with yesterday, right? Yesterday was like day before yesterday, which is that it was indecisive and it was inconclusive and there was not very much to go on, right? Most of the day, the market kind of spent flitting between trying to take out these resistance levels and trying to kind of hold on to lower levels as well. So inconclusive and indecisive is what we had in terms of yesterday's session. Overnight action has been positive, though. So the Nasdaq actually ended up about 1.7% or so. The S&P was up about 1.5%. And the reason, the thing which catalyzed this move is basically weaker U.S. economic data, which basically pushed Treasury yields sharply lower. The 2-year lost 12.5 basis points. That came in at about 4.8%. The 10-year lost 9 basis points to 4.12% as well. So these are very sharp corrections that we've seen. Consequently, the dollar index sold off about almost 0.5%. We were basically looking at 104.5 kind of levels, and we've lost, we're back to 103.56. There is more data ahead. So, the job openings number, the conference board consumer confidence, those are the two numbers that we got yesterday. Those those basically nosedived. And that kind of raised expectations that maybe the Fed will be on hold and the economy is slowing as desired. But it needs to be we need to watch two other data points this week. So on Thursday, we get the core PCE, which is a measured inflation indicator for the Fed. And then on Friday, we get the jobs data, which is, of course, the big payrolls number that we get. That's a monthly number. And I think that will, once again, if they are soft, if they're weak, I think it'll reinforce expectations that, you basically will have, we won't have, the Fed going once again, starting raising rates and trying to find where perhaps they need to stop finally at. Just consider this number, just to come back to our market. Post-Jackson Hole, the Nasdaq is up almost 4%, whereas the Nifty is actually absolutely flat. I've taken only 2 days worth of change for the Nifty, which is Monday and Tuesday, because the reaction for us was on Monday morning. But for the US market, that's Friday, Monday and yesterday, overnight. So, you basically have almost a little over 3.5%. So you're, at least in the very near term, perhaps running a little slower as compared to the big market, which is the US. Now, let's just come to the levels here. I said this, on Monday. I started by saying that perhaps, a little more confidence starting to come back after a little bit of sideways kind of price action, but need to watch. We're not clear and we're not kind of, crossed the hurdles. So the first one is for the Nifty is 19,369. That is nothing but the gap area. So if you remember, between last Thursday and Friday, the market sold off dramatically. So the lower end of Thursday's trading session is 19,369, and that's the gap area which the Nifty needs to cross. Most likely, it's 20-25 points away. You need to go above it, close above it. Intraday, we did cross it. So that's the first number. The 20-day moving average, because the market's not been doing all that much, has also moved lower. That stands at 19,452. That's the second resistance level. And on the way down, The Nifty should not break the low of 19,230, which again, after 2 or 3 days, it's not very far away. Perhaps it will be further away with today's session. So that's where we are at on the index. Now on the Bank Nifty, that's faced selling pressure at the 40-day exponential moving average, which stands at 44,560. We closed at 44,500, right? So again, it's a first very near-term kind of level. You need to close above it. The next levels for the Nifty Bank are the same that I put out yesterday. These are retracement levels from the July high to the August low. The 50% is 44,985. The 61.8% retracement is 45,312. These are again not very far away in that sense. And on the lower side, perhaps you can use 43,984 as a bit of a support. The implied open will come up on your screen, and I would still say test the waters with kind of small positions and see and test the strength of the market in terms of whether it wants to hold on to high levels, it's able to hold on to or not. And once some of these levels are taken out and we get a close above it, I think it'll give you better, more confident kind of entry points and opportunities. Sonia.
Absolutely. And, it's the same situation of sort of bad news is good news kind of situation in the US markets, right? We had a really strong day. And if you look at what happened overnight, it's been the third straight day now of gains on Wall Street. The Dow was up almost 300 odd points. And if you look at the data that came through, the US Consumer Sentiment Index, as we spoke about it earlier as well, it signals that the economy is slowing down. So the index came in at 106.1. The expectation was 116. And if the economy is slowing down, perhaps the Fed may not go ahead and raise rates further. So that is something that boosted the US markets overnight and markets across, many other parts of Asia as well. In our own markets, both foreign and domestic investors bought in the cash market, small amounts, 60 crores, 305 crores. But nevertheless, the cash market flows were positive. The Nifty has been consolidating near that 50-day moving average, around 19,340. So it's important to see if, that level gets scaled up or not. For now, the starters, it seems like there could be a positive opening. I just want to talk a little bit about the mid-cap outperformance, because in the month of August so far, if you look at it, the Nifty is down 2%. The mid-cap index is up almost 2.8%. But the quality of stocks that have gained, raises questions about euphoria in the market. So just look at the quality of stocks. There's HCC, which is up 40% in this month. There's Bajaj Hindustan, which is up 46%. There's JP Associates. There's Suzlon. There's Alok Industries. So you just want to take a step back in the mid-cap space, be a bit cautious, because the profile of stocks, raises a bit of questions about euphoria. But other than that, this market looks like there could be a little bit of green. There's a lot of data coming through. There's GDP data. There is auto sales as well. So we have our hands full.
Well, that's right, Sonia. Today, the sense you get is maybe we have the ingredients in place to have a really good trading session. Let's see how that works. I'm not saying go ahead and buy the gap up, but maybe buying on dip could work today. You have a softer dollar out there. You have the yields that are lower as well. And these are both equity market positive. Remember, we have expiry that plays out tomorrow. And the rolls that I'm looking at, the rollover positions are on the lighter side. So we have today and tomorrow, but it appears there's plenty of action still left in this series itself. Now, the Nifty is likely to open up higher. You'll want it to go ahead, conquer the 50 DMA and trade above that. That's the first target in the first hour itself. The breadth of the market is very, very strong. I was just looking at the NSE 500 stocks, and technically they're so strong because more than 80% of them are trading above the 200 DMA. That's telling you the kind of breadth that we have in this market. Extremely strong. Now, the FI positions in the F&O market, well, for the second day running, they added close on 2 long positions for every 1 short position. And in 2 sessions, they've added more than 30,000 contracts on the long side. The short positioning has, the addition is not as much. So that's why from the end of last week, you had the short positions at close to around 60%. That's gone down a little bit to around 55%. I'm looking at 2 strikes now on the Nifty. The 19,400 call that was active added more than 20 lakh shares. The premium there was around 30 rupees, but on an average during the day, it was around 35 to around 40 rupees. While on the downside, the 19,200 put, well, that as well was fairly active. The premium in that vicinity of around 23 rupees or thereabouts. That brings us to the levels then. Since we had writing at the 19,400 call, the 20 and the 50 DMA, they become the bit of a resistance zone. So first you look at the 50 DMA. If that crosses, then you're looking at the 20 DMA. On the downside, the recent low is the near-term support zone. The Nifty Bank options data as well should come up for you on the screen. I'm just looking at 1 strike. That's the 44,600 call. Remember, the Nifty went ahead and almost tested the 45,000 odd mark, but we couldn't hold out there. Now, today is a good chance that we go ahead and breach that mark, the 44,700 odd mark, that becomes a bit of a resistance zone. And we have the 50 DMA in that vicinity, while on the downside, the 20 DMA as well. GIFT Nifty suggests a 70-80 point gap up. Don't go to chase the open, but maybe, just maybe, if you buy the intraday dip, today could turn out to be a bit of a catch-up session for the Nifty, as well as we could have some green on the screen. So now.
Okay, we could have some green on the screen. The bulls would definitely like that. Before we start, let me tell you what's lined up in the first half hour of the show today. We'll get you updates from the markets across the globe. Dean Kim of William O'Neill will be with us. And we'll also talk, of course, about the global trade setup. Our research team will also bring you CNBC TV 18's list of top 10 stocks. At 8:30 a.m., a fundamental stock analysis with our market expert, Prakash Diwan. But let's very quickly talk about some money market calls that are coming in this morning. Kunal Sudhani of Shinhan Bank says the US dollar sharply declined as US Treasury yields stumbled following disappointing employment data from the US, including the JOLTS report and lower than expected numbers from the Consumer Confidence Index. He says all eyes now remain on the US non-farm payrolls data. For the dollar INR, 82.40 acts as a support while 82.80 is a resistance.
Okay, on bonds, we have Neeraj Gambhir of Axis Bank, who says that the 10-year benchmark bond yield traded in the range of between 7.16 to 7.2% last week. He says at the start of the week, bond yields hardened on the back of higher U.S. Treasury yields. However, he says weak global PMI prints led to easing of yields during the week. He says the strong receiving at the 5-year overnight index swaps around 6.75% and relief rally post the Jackson Hole Symposium also supported softening of yields. He's expecting the 10-year benchmark bond to trade between a range of 7.15 to 7.25% for the week.